What's up, everybody? What's up, you happy people? This is BGAFX Legend, and welcome back to my YouTube channel. I'm here to introduce you to the world of synthetic indices. In this video, you will learn everything you need to know about synthetic indices. And make sure you watch until the end of the video, as I'm going to teach you a trading strategy. If you have been looking for a quick and easy trading strategy, this is the video to watch. Make sure you watch until the end of the video. So, ladies and gentlemen, let's go. All right, traders, let's get into it. I'm so excited. I'm super excited for you because I know with this video, lives are going to change. Things are going to change. And I'm just excited. So in this moment, I want you to just sit back, relax, and enjoy, right? It's going to be 99% enjoyable and it's going to be 90% profitable, and you're going to smile. The introduction to synthetic indices, volatility indices, as we may name it. So let's go. All right, so I just want you to go through this disclaimer first before we do anything. The information provided by BGAFX Trading Academy is for educational and informational purposes only and should not be considered as financial advice, investment recommendations, or any offer to buy or sell any financial instruments, including synthetic indices. So I want you to go through this. You just pause a little bit, go through everything, and then if you click next, it means you agree to what I'm saying. All right. So why should you listen to me? Why should you listen to me? Why should you listen to me? So I want you to look at this book, Making Money Trading Volatility Indices. Have you ever come across this book? If you have come across this book, or if you have read this book and it has changed your life, I want you to leave your comment and give me your experience. So basically, I've been trading the markets for quite a long time, over a decade now, and around 2018, I authored a groundbreaking book that impacted thousands of synthetic indices traders globally, sparking a wave of financial empowerment and reshaping how people approach the synthetic indices market. So this book has changed lives, and also this book led to the formation of the academy that we have now, which is now called Blue Gold Order FX, or Blue Gold Order Trading Academy, because after this book went out into the trading communities, a lot of people stepped in, they messaged me, emailed me for mentorship and trading guidance, and we ended up having the community, the beautiful community that we have now, right? So leave a comment below if you have come across this video. So what I'm trying to say is that I'm not just here to play with your minds. I'm here to try and help you and share the information that I have. And I've been trading these indices and I've seen lives changing. All right. So the question that most people have is that, can I really make money trading synthetic indices? And the answer is yes. I've seen people making money. I myself, I have made money trading synthetic indices. I've seen people making a lot of money across the globe. If you check on your socials, Instagram, Facebook, YouTube, and other trading platforms, Telegrams, you see a lot of traders have been trading these indices and they have made money. So here I've just gave you a quick show of some of the screenshots that we have had within our communities and my student results. And here you can actually see that a $26 account was turned into $437, and another $995 was turned into $10,596, and a $2,791 was turned into $12,889, and a $66,000 was turned into $869.51, and a $176 was turned into $17,000. And all these are profits, and they have been withdrawn, and lives are changing, right? And I know when you're looking at this screenshot, you're actually probably wondering, is this possible? Yes, yes, it is possible. But I'm here to tell you that not many people are able to do this because it needs a high level of skill, accuracy, determination, and you have to be an exceptional trader. All right, so let's continue. Now, why should you listen to me again? So basically, 3 years ago, I was actually trading and helping my students in the community, and I was receiving tons and tons of messages across our socials on Instagram, and people were saying, can you try to give us a little bit about these synthetic indices. And I ended up recording this video, the ultimate beginner's guide to volatility synthetic indices on Deriv, right? So this video is the #1 synthetic indices video on YouTube right now, and it made about 114,000 views in 3 years, right? So this is the evidence that what I'm talking about, I'm not guessing. I actually know what I'm talking about, and I know that this is about to change your life. Now, about us or about me. So basically, I am BGAFX Legend. So who we are BGAFX Trading Academy, also known as Blue Gold Aura Forex BGAFX Academy, an online trading platform, education platform, and community focused on empowering traders across the globe through trading synthetic indices. We also trade Forex, crypto, and stocks. So if you want to learn how to earn $10, $20, $30, $40, $50, $1,000 to $10,000 a month, secure big figure payouts, and scale to $1 million in funding in all just in 3 to 12 months, which is something that I've been pushing. We've been pushing ourselves, pushing my students to do the most in the markets, because I believe that anything is possible. And we actually have a mentorship program trusted by traders worldwide, as you have seen through our videos and a book. I'm not just appearing. I've been here and things have been so exciting. So you want to say goodbye to guesswork, follow a proven step-by-step roadmap to build consistent, profitable trading habits faster than you thought possible. Enrollment is now open. Limited spots are available. If you want to join this, you are going to experience 100% professionalism, and we are 100% success oriented. You can actually book a free consultation call, and I'll speak to you and see if I can be able to help you. By the way, I do not mentor each and everyone. I don't mentor everyone. I mentor only the serious people that I would have spoken to and seen that they are really interested and they're really hungry for success and they're willing to put in the work, right? So to get in contact with us, the links are in the description below. So you just click the description and you see our details. All right. You can also follow us on our socials. I'm usually active, mostly active on our Instagram page, where I post most of our profits, reels, and so forth, motivational stuff, material, information, educational material. And the handle is at bluegold_aura_fx, as you can see. Right. So this is where it's about to be. It's about to begin. It's about to happen. But before we do that, I'm sure you saw the previous video we did got 114,000 views. So this one is an upgrade, and we need you to do something. I need you to do something. I want you to click the subscribe button if you haven't already. And I want you to like this video so that the YouTube algorithm can push it out into the world so that many people can see and it becomes #1. It must pass the previous video. So you and me have a great job to do. Just click the subscribe button and click the like button. And also, if you'd want your friends, your family, your colleagues, your group to see this video, as it is going to be informational, you can share the link just by clicking the share button. Let's go. Now, what are synthetic indices? Basically, synthetic indices are financial instruments that simulate the behavior of real world markets, but they are entirely computer generated and algorithm based. So the key word here is simulation, or simulate the behavior of real markets. They look like the real markets. They look like the Forex market that you know. They simulate the behavior, the movement, the patterns of the market that you actually know. I'm sure, as you know, as traders, we're basically focusing on our price action, the study of candles, the study of patterns to make the decisions to either buy or sell. So because of this, you are able to trade synthetic indices. Now, the word synthetic, where does it come from? I'm sure you know, anything synthetic, it's not real, but it looks like the original. For example, we have real diamonds. They are found beneath the earth. You have to mine them to get a diamond. They are so rare, right? Very much pricey, and a lot of people want. It's actually a symbol of success, a symbol of wealth. But now we have a market of what are called synthetic diamonds. They look like diamonds. They have the texture of diamonds. They, when polished, they actually look like diamonds, and the market is booming right now. But they are created within the labs, right? But they have everything that the original, the real diamonds have. Okay, so I'm just giving you an example. So hence the word synthetic, right? They are primarily offered by specific brokers like Deriv.com. This is the broker that I've been using for so many years when trading synthetic indices. I've never used any other broker, and are not traded on traditional financial exchanges, right? So these are instruments that are owned by key or specific brokers like Deriv.com. Now, these instruments are generated by a cryptographically secure random number generator. These are just algorithms. They mimic real markets but are affected by real world news or market volatility. So if you have been trading Forex, you have been trading other markets, and you see that when there's a tweet, the market moves, becomes volatile, the market moves in all directions, there are spikes, so many things happening, chaos within the markets. These synthetic indices, they are not actually affected by the organic or the markets, the real world markets that we all know. So they are also regulated and audited by an independent third party to ensure fairness. So the broker that you are going to use, or the broker that will be providing these synthetic indices, must be regulated. In the case of Deriv.com, they are regulated by so many regulatory boards. You can actually go and see on their websites, right? Let's continue. Now, these are some of the synthetic indices that we trade. Obviously, it's actually a vast world of indices, but on Deriv, these are some of the indices that we trade. I could not put all of them, but just to give you a clear picture and understand the language, I decided to just put a few. So we have indices that are called jump indices or jump index. You have range break indices, step indices, basket indices, crash and boom indices, hybrid indices, volatility indices, which I believe these are some of the most common. You have volatility 10 index, volatility 25 index, volatility 50 index, volatility 75 index, volatility 100 index, right? Now you also have multi-step indices and so forth, right? So the broker that we use is Deriv.com, and of course this is just me sharing the broker that I use. I was not told to promote Deriv, but this is just me. I do not promote brokers, but I believe that if I'm really explaining these indices, I need to also to show you where I am getting these indices and where I actually trade these indices. All right. So one of the reasons why I love trading synthetic indices is because of the high leverage that we are given when trading. So we are able to get a leverage of up to 1:1000 on selected instruments to make the most of your capital. This is the reason why you are able to trade a small account, or you are able to start with small capital and make a lot of money, right? With me here are 3 screenshots that you can actually see, and we can see on the far left we have a $176 turned into 17,183, right? And then we also have a $30 turned into $2,045. We also have a $19 turned into $1,019, right? The reason why this is possible is because of the high leverage. Obviously, you have to have good technical skills to be able to utilize and maximize the potential of this leverage. But synthetic indices offer you this leverage as opposed to the traditional markets that we know, like Forex, crypto. Obviously, some other brokers, they do have high leverage, but they have high leverage and very huge spreads. But I'll talk about that in the chapters that are coming, right? Margin levels, right? This is also the sweet spot of trading synthetic indices. We have leverage up to 1:1000 up to 1:1000 on selected instruments to make the most of your capital. They are useful for scalping, day trading, or trading synthetic indices or Forex. So you can actually scalp or you can actually swing because of this. Faster when it comes to compounding your money. What it means is that a small account can actually grow faster in percentage terms when trading synthetic indices. Now, because of this or these low margin levels, small capital will not limit you when it comes to synthetic indices trading. You can actually start with a minimum of $10 and there are low margin requirements. That is, one can start to trade with as little as $10. Like I just said, as long as your trading skill is good, you can trade with any amount. So here we're looking at a $10 account that was flipped to $843, right? Obviously, your question is, how is this possible? Number one, you need to have a good skill. You need to have a strategy that allows for a sniper entry or an entry with minimum to zero drawdown. And then as the trade proceeds, you are able to scale into positions and add more to the profits that would be running, and you keep on making money because leverage and margin allows you to do so. But I also need to emphasize that if you don't know what you're doing, this leverage can actually destroy your accounts, which is why I encourage people to have enough information, enough knowledge, trading experience, would have backtested enough to be able to do this. Now, let's talk about synthetic indices. What are the advantages? What are the pros of trading synthetic indices, right? For me, this is actually the reasons why I do love trading synthetics. There are not so many limitations when it comes to trading synthetic indices. So in terms of availability, unlike currencies, stocks, and CFDs, etc., which have a window period of trading that is from Monday to Friday, synthetic indices are traded every day, including weekends and public holidays. Yes, I said it. Weekends and public holidays, you can still trade synthetic indices. In terms of market volatility, the market volatility of or movement is uniform across or throughout. This means that at any given time, you can achieve your PEEP target, right? The market is constantly moving. These are algorithms, right? So whether you want to enter into the markets, you don't have to worry about the markets, the traditional markets that we know, like Forex. There are periods of high volatility, like the London session or the New York session. Here, at any given time, the market is going to give you enough movements for you to profit. In terms of flexibility, one can do other things during the day and trade during his or her free time and still make consistent profits. You will still get unlimited opportunities based on your strategy. You are flexible to do whatever you need to do. For some people who have their 9 to 5s, you can go to work, come back during the evening, you can actually make money. And for those who work maybe Monday to Friday, do not have access to trading, you can still come during the weekends or public holidays and still profit and still trade. There are no holidays when it comes to synthetic indices. So 24 hours a day, Monday all the way to Sunday, 365 days, including public holidays. Yes, I say this. Right now, these indices, they are backtestable and algorithmic friendly. So what do I mean? Because the prices are generated by algorithms, their behavior is consistent over time, easier to backtest or refine manual systems compared to new sensitive markets like Forex or stocks. They are actually backtestable. You see when you're actually looking at the charts, and they are easier to backtest and refine to create a system, because these are just patterns that are repeating themselves within the markets, right? Let's talk about money in terms of making money. You can actually make more money when trading synthetic indices because the volatility or aggressive nature. Day traders can easily make a lot of pips in a single day. One can easily get in and out of the market because of the volatility and aggressive nature. You just need a small movement to make money, depending also on the index that you are actually trading. There are no fundamentals. Synthetic indices are not affected by fundamentals or news like CFDs, stocks, and currencies, and this narrows our focus only to price action. You don't have to worry about looking at what is happening within the world, what is happening with the US dollar or the pound, the yen, and so forth. You don't have to worry. You don't have to actually go on news platforms to see what is happening, because news does not affect these indices, right? You just have to focus only on your price action or your trading strategy. Once you see your setup, you strike and you make money. There are low spreads when you're trading synthetic indices. Unlike currencies where there is direct and real-time manipulation of spreads so that one does not profit from scalping, synthetic indices have low to no spreads. When you're looking at traditional markets, you see some brokers, they actually manipulate markets, or you see the spread. If you look for a spread calculator that you can use either on your MT5 or MT4 platform, and you actually place it, you can actually see spread shifting from like 2 pips to 7 pips or 8 pips when you're trading currencies, right? That means they can be manipulating and moving spreads as they will. But however, I'm not saying do not trade Forex. They're actually good brokers with tighter spreads and stable spreads. But compared to synthetic indices, they have low spreads. And you actually see that with some indices, most of them, immediately, as soon as you place your trade, you actually start to see the blues or start to see the profits, because the spreads are zero or too low. Now, in terms of price nature, synthetic indices mimic the nature of price found on CFDs, Forex, crypto, etc. The market prints pure price action. That means your price action based strategy actually works. You don't have to worry about how am I going to trade, because your price action strategy actually works, because the nature is almost the same as the nature of currencies, but there is a little bit of variation, because on currencies you see news spike candles and so forth, but you can't see that on synthetic indices, right? Now, in terms of stability, now, because they are algorithm driven and regulated and audited, they offer more consistent technical behavior. Like I said, you don't have to worry about changing your strategy all the time. As long as it is good, you can still make money. Now, I cannot explain this. I cannot tell you, I cannot teach you more without telling you the broker that I've been trading. So after I did the first video, I've been receiving tons and tons of emails and messages. Which broker do you use? This is the broker that I use. I use Deriv Broker, and this broker is actually been in operation for like 25 years. You can actually go and see on their side. They have more than 3 million traders worldwide, and an average of 46 million in terms of withdrawals every month, and also around 187 million plus monthly trades, and a turnover. They have a total turnover ever since, I believe, the inception of like 33 trillion, whatever that means. So what am I trying to tell you? I'm trying to show you that this is not a fly-by-night broker. This is a broker that has been there, and we have been trading. I've never had problems with this broker, and you can actually start trading with them. By the way, this is not financial advice. You still need to do your own research and still make your own decision. But the reason why I'm doing this, I'm trying to build trust so that when I'm explaining everything, you will understand why we trade this. So Deriv is one of the world's largest online brokers. They offer synthetic indices, CFDs, and other derivatives on Forex, stocks, cryptocurrencies, commodities, and other derived indices to millions of registered users across the globe. Withdrawals, right? This is where I believe most people want to hear. You want to know if I put my money, am I going to get my money? Is my money secure? Am I going to get my profits if I make money? And how fast are the profits and so forth? I've been using this broker since not 2018, since around 2016, 2017. This broker, when it was still called binary.com, and they then they changed their name to deriv.com. They have fast deposits and withdrawals. right? Let's take, for example, I'm trading, and by the way, I love withdrawing my money using crypto, Bitcoin or USDT, but there are so many ways you can withdraw. They have so many platforms like Skrill, Nitella wallets, so many wallets you can use to withdraw. But personally, I love crypto because it's easy for me to move. It's easy for me to withdraw my money. On average, it takes less than 30 minutes to an hour or so to get my money if I withdraw with crypto, and that's how quick they are, right? So yes, if you are trading with them, I can actually recommend this broker if you want to trade synthetic indices. Now, also in terms of this broker, if you want to know their performance, right? These are some of the awards that they have. They've been operating since 1999, and we can see right now that if you go on their website, they've actually displayed some of the awards that they got. In 2025, they got a UF award, Best Trading Experience Global. They won an award for that. In 2024, with Finance Magnets, they won an award, Broker of the Year in 2024 across the globe. And in 2024, again with the UF awards, they won the Most Trusted Broker. The Most Trusted Broker. Let me repeat that, the Most Trusted Broker in 2024. And if you go in 2025, they also won an award with Global Forex Awards. They won the Best Customer Service Awards. Yes, they do have the Best Customer Service. If you have a query or anything, the support team is quick. By the way, I need to re-emphasize again that they have not told me to do this video. I have done this video because I trust this broker and I've been using this. Deriv, if you're watching this video and you like it, if you love this, yeah, you need to do something for me, because I'm just telling people how important this broker is, guys. I love this broker, and if you have been using this broker, please leave a comment. And if you love this broker, please leave a comment. All right, let's continue. The reason why I did this is because, guys, it's so painful that after all the hard work that you would have put, you have made money, you'd have gotten trading capital, by some means, you make your money, you're so excited, you try to withdraw your money and you cannot get your money, like what other brokers are doing and what other pro firms are doing right now. I've never had a problem when it comes to withdrawals. As long as I see my money in the dashboard, if I withdraw my money, I get my money, right? So who can actually trade synthetic indices? Who are they meant for, right? So basically, synthetic indices are beginner friendly. They are meant for everyone who is a trader, who wants to trade, right? And if you are a beginner, they are also beginner friendly because you don't need a lot of capital. You can start small, like $10, and then you scale your way up as you see fit. To trade synthetic indices successfully, you need a good understanding of the underlying assets or an understanding of the markets and how they interact. You need to have proper market research, and you need to stay informed so that you can be able to trade properly. To gain more knowledge and confidence, you need also to join a synthetic indices community. This is something that I recommend. Try to join a synthetic indices community, because if you go on the internet, there is not so much information with regards to these indices, right? But by joining a community, you are able to help yourself and be part of traders who are trading these, and if you have any challenges, they'll be able to help you. And now, understanding the numbers on synthetic indices, right? This is something that I prepared to try and help you guys understand what you'll be seeing when you're seeing those indices. So basically, in terms of volatility levels, there are different levels of volatility. For example, Volatility 10 Index, Volatility 25 Index, Volatility 50 Index, Volatility 75 Index, and 100 Index. You see the number 10, 25, 50, 75, 100, right? I'll explain what these numbers mean with an example. So let's say in the Volatility 10 Index, the volatility is kept at 10%, which means it's 10% volatile, which is an excellent choice for traders who prefer low price swings or fluctuations. It is a bit slow and calm, right? With the Volatility 100 Index, the volatility is maintained at 100%, meaning there are much stronger price swings and no significant price gaps. They are continuous indices. So V100, it's 100% volatile. It's a bit faster and more aggressive, right? Now, this is something that I recommend before you put your money, or if it is your first time, you've never traded, it's recommended that you start with a demo trading account. And if you are new to trading synthetic indices, you need to do this, right? Once you're good, you're comfortable, you're familiar with the instruments, the platform, you can actually put in your money and you trade. Start with $10 or $20, depending on your skill level. This will help you to minimize your risk while you learn how to trade synthetic indices. Try out trading without risk using a free demo account equipped with 10,000. So Deriv actually gives you a demo account with 10,000 in virtual currency on Deriv so that you can start. The link is in the description if you want to create your demo account. Now, let's talk about withdrawals. So I can't just tell you that this broker is good. I can't just recommend a broker because it's something that I've never done on this channel. And if I'm doing that, I need to try and give more information to try and help you. So here you can actually see that within our community, I've got one student this year who was able to take a $500 account to $200,000 trading within a few months. So I need to show you and tell you more about it, and to show you that indeed, if you actually make your money, you are able to get your money. This student was able to get his money and withdraw all his funds, right? So you can actually see this is the dashboard of Deriv dashboard. You see when you log in with your account, when you create, you see like this is what is called the traders hub. You see the cashier and so forth, but in this case we're talking about the traders hub. So we can actually see that at this instant the trader had made like 200,959, which was in his dashboard, right? In his dashboard. So what this broker does is that it compiles the money that is in the trading platform and the money that is in the dashboard. So here you can see on US dollar with this United States flag, you can either keep your money as fiat or as US dollar, or you can keep your money in a crypto wallet like USDT or Bitcoin. Personally, I like to keep mine either in USDT or in Bitcoin. So this student had money in his Bitcoin. Hence, you see here it's 0 in USD. Like, you know, it's for some people, they say they really don't want to withdraw using like the MasterCard or Visa card. They just want to do crypto. It's quicker and faster, right? So at this instant, he had made 200,000. Now, this is his trading account, MT5 screenshot with his account 2153. Obviously, I had to hide some digits and his name above, Deriv BVI Limited. Deriv Saver, Germany, Access Saver, Germany, number 2. There are so many savers, and you can see hedge. It's actually a live account, 209,465 in his trading account, right? This is real. So everything that I'm sharing, the students send me in my inbox. I actually have all the things that I have, including the videos of the trading account. Now, this was actually the conversation I had with the student, and I was actually amazed by what he had done. This is not something that happens every day, but I've seen that happening. People flipping accounts from small accounts to big accounts and, you know, withdrawing. So he had made this much money. Now, this is where he was showing me. I was asking him, how much did you start with for you to make this money? And he told me $500 US, boss. And I was like, wow, that's power. Now, this is something I encourage people to do, and I encourage my students to do. If they are trading, I always tell them, send me proof and enough evidence that indeed this is a live account and this is your live account. So here he had recorded a video and he sent me a video of the actual trading account. And if you scroll in with history, you can actually see the losses that he was making, the profits he was making when he started, and how he ended up flipping. You can see here he had made like 133,254 58 profits at this given time, and he had deposited $554. A withdrawal of $61,000 was made, and you can see swap and so forth. This is actually a video. You know, you can't fake a video, and I have it It's around 7.5 megabytes, and you can see you are trading V25, V75, V50, and so forth, right? And if you really want this, I can actually show you. I can do a video call and then either a Zoom call, and I'll show you if you really need proof of this. And he was telling me, boss, please, I'll get you all the pictures. I was like, send me all the evidences. So he was sending me and stuff, and said all the other records are on my phone. Right, let's continue. The reason why I'm doing this for transparency purposes. Okay, so like I always tell my students, I always tell them to diversify their portfolios. Like I told you, we don't just trade synthetic indices. We also trade Forex in other markets. So I told him, withdraw everything, because what you have done, not many people have done it. When you make a lot of money, it's good that you withdraw, put it in your bank account, and then you can start using a little bit of it to continue investing. So I was encouraging them to trade pro firms, and you can see that here he was actually trading a $200,000 pro firm account, challenge account, and he was almost like close to passing it in phase 2. Right now, how do you actually set up an account with Deriv Broker? It's very simple, guys. It's very simple. Open your Deriv trading account. Just click the link in the description below. It will take you to the broker sign up page where you sign up. It's very simple, which must take you at least a minute or two. Sign up and fill in your information. And like I said, this should take you at least less than 2 minutes to do. And you need to verify your account. The reason why you must verify your account, it is because when you make your money, it is easy for you to withdraw your money. You don't have to now start. I've seen people, they want to start verifying their account because they have made money. Now they need to do that. You need to, if you are a professional trader and a trader who wants to trade properly without any challenges, verify your account first before you deposit. So you must verify your account, which should take you, again, less than 2 minutes to do. Now you can download MT5 though. So this broker they use, it uses MT5 and other platforms. There are so many platforms on their side. Personally, I've been using MT5. So you download your MT5, you log in with the details that they would have given you either on your demo or live account, and you put on your devices and you start trading. It's that simple. It is very simple. So if you want to do this, sign up. You can just click the links in the description below. All right, guys, so let's talk about synthetic indices on Deriv, right? So basically, this is just the representation of some of the instruments that Deriv has and is found on the platform TradingView. So they have got what is called Deriv TradingView. You can just go on Google, type Deriv TradingView, and you will be able to get these indices. So this is not really a deep tutorial for me to teach you to use the platform, but it's just for me to show you. I want to explain a few things so that you can be able to trade using this synthetic indices, right? So so the first thing that I want to talk about is the pairs that you can actually see on the indices. So if I click here, you can see these are some of the pairs. The broker does not just offer synthetic indices, it also gives you like the Forex indices and Forex pairs. All right, so here, this is just, if I click here, this is Volatility 100 Index. As you can see, this is Volatility 10 Index, V75, right, the most common one. And this is V75 1S Index. This is Step Index, as you can see, Step 100 Index. Now let's click Step 2. This is Step 200 Index. Jump Index, right? Jump 100 Index, and this is Jump 10, right? I hope you've seen that. So I can also click here, and if I delete this, you can see all these indices. You've got your V10 Index, V10 1S, 15 Index 1S, V25 1S, V25, V30 1S, V50, and so forth, right? We have what are called basket index, or AUD, USD, like Australian dollar basket, Euro basket, pound basket, dollar basket, gold basket, step index, step 100, 200, 300, 400, 500 index, boom 300, 500, 600, crash all these indices, range break index, right? All these indices that you can actually trade on the platform, right? So I want to explain a few things so that we can be able to do this. So I'm going to use this V25 index chart, right? Maybe on the 1 hour. All right. So if you look at these indices, right? I'm just scrolling so that you can see, we can see actually the same behavioral patterns that we actually see on the Forex market, right? The market being in an uptrend, the market being in a downtrend. We can also see that what else? The Forex pairs or the markets, they actually like to range, and we can actually see the same behavior happening on this particular with this particular pairs. You can actually see that they love to range. Okay, let me just prepare this quickly. Right, there we go. So you can see here we are the ranging market. What else? You can see here we can actually see an uptrending market. Here you can see, right? So now I also want to talk about the behavior in terms of the nature of price. If you look at the Forex market, you see that the Forex market likes to move in two ways. Either the market is going to want to either impulse, right? You will see impulses, right? The market will impulse or correct, right? You see impulse and correction phases in the market. So this is just the behavior, because I want you to understand that they mimic the markets and you can actually capitalize on that. So we can see on this price leg or this swing leg here, this was actually an impulse push. You will see this through the evidence of very strong momentum candles in the same direction. And all of a sudden you see a choppy or behavior where the market is not moving. It's in a range sort of, and then we see a breakout again. You see a bit of ranging, and then you see another breakout again. You see another impulse, another correction, impulse, correction, and so forth, right? This is the first thing that you can actually identify with this, with these indices, right? Now, the other thing that we can talk about is, let's take, for example, you are a trader who is a trend line trader. You also notice that they also like to follow trend lines. By this, I don't mean that like the strategy is a trend line strategy, no, but I'm just trying to show you like the similarities and the things that you can actually see with regards to these indices. So you can see here we had a bounce there, right? A bounce of a trend line, another bounce, a bounce, right? And then you see another bounce. Let me see if I can pull another one, right? If I can pull another trend line here, one touch, two touch, three touches, you can extend, and you see there was a breakout. If you are a trend line breakout trader, whatever, here you can see we also had another correction here, right there, right? You can see one touch, two touch, and then there was a breakout, trend line breakout, whatever. If you're a breakout trader, what else can I talk about? Yeah, so what I'm trying to show you is that the behavior of these indices is just similar to the Forex market, right? So let's talk about structure. Here we can see that the market is in an uptrend. How do we see that? We see it with the breakout. So here with the breakout and this was actually the breakout structure. Right, let me just make this a little bit smaller, something like this. Right, so this was a breakout structure, and these are your swing points. So we had a low, lower high, a lower low, and then we break structure to the upside. The same thing that we see after a break, we see a retest, and then the market pushes up again. We can actually see we had another structural high to the left here being broken, right? Which some people, which you might call support, whatever, support broken. And you can see here the market Actually, when this was broken, the market used it as a resistance being broken. It became support. The market started buying again, and we see another swing point or swing high, higher high point right here, lower higher high, higher low, right? So here we had a low, a higher high, higher low, then we break out a higher high, higher low, and then we have another breakout to create a new high right there. Okay, and you can actually see that this gave us this break, and we can actually say that this is the break of structure, and then we have another break of structure right there, and then this again is a low point, another high, and then we broke structure again to the upside, as we are still in an. Why am I doing this? I'm just showing you that the behavior of this market is just similar. You just need to know exactly what you're doing. So it continued in an uptrend. You can see these major swing highs were being broken, obviously with internal structure and so forth to the upside. Now, the other thing I need to talk about is, because of these reasons, you can see here we had high, low, high, low, high, low, high, and then we had a change of push, and then there was a massive impulse to the upside, right? Let's look at another thing or something else I can talk about. And for those who trade patterns, you also be able to see patterns, like you see an impulse here and then a correction. There was a flag pattern, right? This was sort of like a flag pattern. You can see this flag pattern, impulse, and then the correction, a flag pattern, a breakout and a retest, and there was a strong impulse or a buy to the upside. If you're a flag pattern or a pattern trader, you can also see a lot of these patterns. Here I see another pattern as well. Don't just trade patterns blindly, but I'm showing you what you can see. So you can see an impulse, a correction, and then the market again pushed out as well. Let's see, can we see another? Oh, this was actually another. You can see this was a range that was being broken right there, or you can call it, I like to call this a pennant, or you can call this a pennant or a half flag pattern. You can see there was, after the correction, there was an impulse. These are some of the behaviors or things that you see with the Forex market. And yeah, so now I need to take you to a strategy or a concept that I want to teach you, right? So there are so many concepts that I use. So I believe that it was fair enough for me to teach you one concept that you can actually start with. And then let me know what you think. And if you need to learn more, we do have a full mentorship program. The links are in the description. You can contact me directly and I can give you a free consultation call to see if we are able to actually teach you. I'm going to share one of the concepts that I use to trade, scalp or swing trade. And obviously this is going to work so much when you are using higher time frames like the D1 time frame, H4, obviously. The higher the time frame, the better the concept, right? M30 and so forth, right? As you go, these are some of the best. So I call this the repro continuation strategy or concept. It's very simple. You need to understand structure. You need to understand the direction of the market. If you don't understand this, we do have a full mentorship program, like I said, where we have a breakdown of these concepts and these techniques so that you can understand and make the right decisions when you're trading. So basically, you need to be able to identify the direction of the market, assuming that the market is in an uptrend. As we see here on the chart, we have an uptrending market, and we can actually see a higher high, higher low point, and then we have a higher high, higher low point as well here. And when the market breaks, this is going to be a resistance area for most people when the market breaks out. So this concept, what happens is that the market is going to tap this resistance, right, and give you like a sell candle and actually break out with an engulfing candle, enticing people to sell and then hitting their stop losses to the upside, pushes up to create a high. Now, when that happens, so it's a tap, creation of an engulfing, there must be a touch. There must be this knee-jerk reaction. When I mean by knee-jerk reaction, assuming you want to show your friends your biceps, right? That knee-jerk reaction, you see this push right here. This push. The in tap, out, creation of an engulfing, and then we are out. That's the knee-jerk reaction I'm talking about. You can see this elbow join, as if you want to show your friends your muscles if you do have some, right? Now, when that happens, the market forms or creates an engulfing candlestick pattern. We push up to create a high. Now, when that happens, we mark this engulfing candle as our zone, is our RPZ zone, or you can just call it an RPZ zone, or you can just call this a buy zone. A buy zone, right? A buy zone. It's a symbol is that. Now, what are we going to do here? When the market comes back again, we want to buy from that zone and put our stop losses below the zone, right? However, to enter, there are so many ways. You can either use a limit order, you can use the entry confirmation that you've always been using, or you can go to lower time frames like I always like to do to refine. I will end up having a stop loss like this, right? And then a very high risk to reward ratio. So you can actually buy from there, put your stop loss below and push up, right? So if we are looking at this sell setup again, it's the same thing. You have a lower high point here, lower low, lower high, and then you have a lower low right there, another lower high. Now you have a support point. Price comes in here, gives you what looks like a bullish candle as if it wants to buy, enticing people to buy before actually forming an engulfing candlestick pattern to the downside, breaking this structure, pushes all the way down and then comes back. When the market comes back, we want to mark this engulfing zone as our RPZ sell zone. Okay, we want to mark this as our RPZ sell zone. When that happens, we have a trade. So you can either sell right there with your entry confirmation or limit order, or you can scale down to refine to actually get a very tighter stop loss, and then you enter. It's as simple as this. Now let's get to the charts so that I show you how you can actually use this. So this is V25 index, and we can all see that this market is in a downtrend, right? We can actually see that this market is in a downtrend and it has been selling for quite some time right now. Okay, so now let's look at a very nice textbook example of what I'm saying. So here we can see we have a lower high, a lower low point, a lower high, and then a lower low. Now if we mark the bottom of this zone, right? So the zone, so when you want to check or test whether the market is actually giving you the setup, you need to mark right on the candle bodies or to the candle wick, right? Anything from here to here, right? So here we can actually see that the moment that price was dropping to the downside, the moment that the market or price was dropping, we actually tapped. You can see this was the tap. We tapped this particular zone. Now, when we tapped this zone, we can also see that with a bullish candle, early buyers, they had to buy, right? And then they put their stop losses right there. So they're going to put their stop losses just below, right? Now, I want you to see what happened. Immediately with an engulfing candle, and the next candle was so powerful, a very strong momentum candle, very impulsive candle, taking all these stop losses out. When that happens, we start smiling. We now wait for the market to come back to the zone, right? To this engulfing zone. So you can mark it right on the body, or you can mark the whole zone. And when you do that, you put your entry right there and your stop loss below, or you can enter within the zone, or you can scale down to lower time frames to refine the zone, like I always like to do. When that happens, we are selling, and simple, you take this trade, you hold all the way down. So for those who were assuming or asking how do you end up flipping those accounts, assuming you get a trade like this, you are holding all the way 1:22 with your store, a very small stop loss, a tighter entry, you can end up getting a very strong and a powerful trade. You risk $10, it becomes a 220. Obviously, with scaling into positions, adding more positions as you go, you will end up having a very powerful trade. So let's look at another position along the way. So here we can see that here we had a breakout right there. We had a breakout here, but we did not have that pattern. Now let's continue with another breakout. But if I look in here, we had another breakout of this particular support. Like I said, the zone starts from here, right? Let me zoom enough so that you can see. Starts from here. We need a touch and an engulfment, right, up to this low point. So we can see that, yes, indeed, this qualifies to be our pattern. So we had lower high, lower low, lower high, and then a lower low. So we interacted, we tapped, right? And then you can actually use this, right, if you want to see the interaction. So we tapped before we actually have the breakout. So this was the actual breakout. So we tapped, like I said, it's within this zone. We tapped, knee-jerk reaction, engulfing, and then we break out. When that happens, right, when that happens, you are going to mark your zone either from here or from this. This becomes your zone. This becomes your zone, and you can sell with a limit order, or you can wait for the actual confirmation, or you can enter within the 50% or the half point of the range, put your stop loss above, or you scale down to lower time frames, you take the trade. So if you remember, the first trade we had was a 1:22, I think again around 1:22, right, taking the trade from the 50% point or the half range. So 22 plus this 13, that is around more than, that is a lot of pips, right? That is a lot of pips that you would have made, and with your risk, depending on your risk, you would have made a lot of money. It's as simple as that. It's as simple as that. So let me see if I can get a buy trade, and I'll show you guys how you could have capitalized on that. It's as simple as that. You are going to find most of these patterns in the market. So here we can see another buy setup. So we have a higher low, higher high, higher low point, and just before this support was broken, or the swing point was broken, remember you measured the zone from here to here, we had a tap, right? And then immediately, so we can't call this the pattern, right? So I'm just looking here. This is not an engulfing, so it doesn't qualify. It does not qualify. So thank God we saw this as I'm recording this tutorial. I did not select the patterns. I just went straight to the charts, and I said I'm going to teach you as I'm seeing them. So this does not qualify to be the pattern. It is not an engulfing to the upside. So make sure you pay attention. You pay attention to that. So let's see if we can get one quickly, and I'll be able to show you as we go. There we go. So let's look at this. We have the market pushing high, higher low, and we have not yet broken, but this is the resistance point, or the point starting of the resistance on the candle bodies. I want you to see what happened, what transpired. We can actually see that the market tapped here, comes back, sells again, right, with a selling candle. So early sellers, they sold, put their stop loss just above this high. Immediately we have an engulfing, which actually breaks out structure. We had 1, 2. So when the market actually breaks, you want to see also the market breaking this high. When it then breaks this high, this becomes your zone, and you can take your trade and you can actually see that this became a very profitable swing trading position that if you were to hold all the way up. By the way, this is on the H1 time frame as I'm demonstrating this. This would have given you like 1:12, depending on your risk appetite and how you trade. Okay, let's see if we can get another one quickly, and we can call this a session, right? We can call this a session. There are so many. Let me see if I can. Oh, I see another one, right? The market is in an uptrend right here. The market is in an uptrend right there. You see high point right there. This is your resistance point, and I want you to see what was happening. Sellers were trying to push price. They tried again, put their stop losses above, and in this instance, we had a very strong, massive taking out all their stop losses. Their stop losses, by the way they were sitting around this region, they were taken out, right? And when that happens, the market is gonna now come back to our zone, our buying zone, which is this one. It's an engulfing candle. Now see, this was a sniper entry, and look at what happened. The market bought, right? Let's maybe go to the 5 minutes, though I don't recommend the time frame, but I just want to show you these patterns are everywhere. Before someone can ask me these time frames on all the time frames. Look here, we have a downward move, and we can see here we had a support point. So this one actually missed to touch. No, it's actually touched. You can say it touched, right? This would have been, I would have loved this touch, to touch this so that this can actually qualify. So if it doesn't touch again, do not trade it, discard it, right? I don't know why there was a gapping here, but it's actually quite a very good example so that you guys can avoid some of these patterns. So if you want to further your knowledge and you want to learn more about the strategies and some of the concepts that we use to trade these markets, you can actually click the links in the description below, and you will be able to speak to me directly for a free consultation call, and we can teach each other how to trade. So let's get to the next phase of the video. All right. So for those of you who would want to get in touch with me and they feel like they need assistance and guidance when it comes to synthetic indices, or you want to get in touch with BGAFX Trading Academy, it's very simple. You can either email us on bluegoldora@gmail.com, or you can actually DM me or send a message on our Instagram page at bluegoldorafx, bluegoldora_fx, and you can also visit us on www.bluegoldorafx.com. And for other contact details, please make sure you check the description below to get in contact with us. So ladies and gentlemen, let us make history. And for those of you who would want to make inquiries, I give people a free consultation call. If you want to be a trader, you just have to be a serious person. I don't mentor everyone. I mentor only the serious people who are eager to learn, eager to put in the work, and they want to change their lives. So ladies and gentlemen, see you in the next video. A peace.